Hello everyone, Dave Landry here from DaveLandry.com. This is Trading Simplified. Wow, episode 30. Every week I say I'm not going to get excited when I say how many episodes there are, but wow, I can't believe it's 30 already. So we're going to talk about, I'm going to back off of the trading rules this week, and there's a lot I want to talk about as far as indicators, and I know you're probably having a question mark there, because I'm not a big fan of indicators, but there are some indicators that are coming soon to the new StockCharts platform, the ACP platform. And I want to talk a little bit about that. I'm going to have a lot more to say about that in upcoming episodes. And I want to do a bear market update. I put the question mark there because things have been improving as of late. Housekeeping, I do take requests. If you need to reach me, davelandry.com/contact. If you want the slides from this show, go to davelandry.com/stockcharts. Put your information in, and I'll get that information out to you right away, along with a bunch of other stuff to keep you busy for a long, long time, including a free market timing course and an introduction to my methodology. If you go to my website under the bear market updates, check the homepage for the latest usually, but if you go to bear market updates, you'll see my posts there. Since the market's been a little bit range bound lately, not the NASDAQ, but the S&P 500, I haven't been doing as many updates, but check back often there. Now, I'm going to talk a little bit about indicators this week, but before we do that, as usual, I always look at a blank chart first. And the first thing I always look at is the net. If I'm teaching somebody how to read charts, the first thing we do is we sit down and we say, okay, where's the market and where was the market? So if you're looking at the S&P 500 and we go back about a month or so, maybe 5 weeks, you can see that obviously the market has worked its way higher. And this is from last week. Notice that we go to the left of the chart from where we are. We take the current close and go to the left. And if you find a broker that lets you trade off the left side of the chart, please let me know. But you can see that the market, even though it's going higher over 5 weeks or so, it's actually going sideways for quite a while. Now, backing it up from where we are now, backing up to last week, you can see we have obviously worked our way higher. For now, though, we are stuck in a range, and this is basis the S&P 500. Obviously, the NASDAQ has broken out higher, and the low of the range is down here, close to 2,800 or so, and the top of the range, 2,950. Now, the good news is, on a net-net basis, we have worked our way from the bottom of the range towards the top of the range. So the last week or so, we have obviously been moving higher. Now, before I start talking about indicators, keep in mind that indicators don't actually indicate, they illustrate what's in the charts. My favorite moving average is the 10 simple, the 20 exponential, and the 30 exponential. And again, I always start with a blank chart first. But when I put those on the chart, sometimes I'll notice that they're rolling over, and sometimes even beginning to cross over, even though I'm still bullish on the chart. And then when I give that chart a second look, it's like, okay, Dave, this market has lost momentum. The bow tie moving averages are telling me that, and when I look at the actual chart, it's actually losing momentum. So indicators don't necessarily indicate anything. In fact, I would argue, and I'm sure some people with proprietary fancy indicators would argue against this, but they don't tell you what's going to happen because they're price-based. They tell you what already happened. But there is some value in that. So again, you want to always start with a blank chart first. Now, with that said, this is a newer indicator for ACP, and this is the 50-day historical volatility, and it's not a proprietary indicator. It's just plain old statistical volatility. And I like to keep an eye on this just to see what's happening. And you can see that the volatility has begun to flatten out. And by the way, it's up here around 70, which is absolutely amazing to me for the S&P 500. And I haven't done the research, or I haven't really noticed when I'm doing the volatility research, but I know that's extremely high going back in history. It'll be fun to go back and see how high it's gotten. I know you probably want to party with me studying volatility, right? And if you go back about 2 weeks in the weekend charts, I spent a lot of time talking about volatility, so I would encourage you to do that. Check my YouTube channel for that. That would be at youtube.com/c/Dave Landry. So with this volatility flattening out, it means that the market is just sort of what? Well, it's sort of chopping sideways, and that's kind of what the actual chart is telling us when we look at the chart. But it is good sometimes to have an indicator such as volatility to tell you what's happening in the market. And there are some other implications of this, which we'll look at in just one second. But as you can see, we are kind of range bound in here. Now, this measure of volatility, and you could use your favorite one, but this particular one is also known as statistical volatility, and it's measuring the day-over-day price change. And you'll see that it only uses the closing price. So if you have a wide range bar day, meaning a big high and a big low, or the high and low are far apart, it only looks at where the market closes. So on a closing basis, especially relative to where it was back when we began to implode, the volatility has really dropped off. And I know, you're looking at the charts and you're seeing up 3% or down 3%, and it just seems like the volatility is whack. And to some extent, it still is, but it's nowhere nearly as crazy as it was 50 days ago or so. Now, what does the flattening of the volatility curve mean? Well, it means conditions are changing. Well, conditions are always changing, but in this particular case, the volatility is coming off of the market. The market's beginning to consolidate, and that means that traders are beginning to agree upon prices a little bit, especially basis the S&P 500. Now, as I said a second ago, it illustrates the range-bound market that's developing in the S&P 500. Also, with the conditions changing, I noticed there's a lot of newly minted day traders. I guess they're bored in quarantine, and some I actually know personally, and they were doing quite well. What they fail to realize, two things. Number one, because the ones that are long only, especially, they have a wind behind them, or as I've been saying lately, more like a hurricane, a tailwind behind them. And number two, the volatility has been so great, it's been fantastic for day trading. I remember years ago when I was trading big S&P 500 contract, I was doing really, really well for a while, and then all of a sudden, I wasn't doing so well, and I didn't know what happened. Well, come to find out, the volatility had dried up, and that was killing me. So just remember, or just know, based on this volatility indicator, that conditions are changing, and volatility is coming off of the market. Now, one thing it does tell you is that there's a chance of a large move soon as that volatility begins to dry up. The problem is, as I discussed a couple of weeks ago in Dave Landry's The Week of Charts, is that it's hard to time off of that. When you squinch up the chart and you look at charts going back years and years and years and years, you see these beautiful peaks in volatility, and then you see these beautiful bottoms in the market. But when you zoom in on them, you find that they don't line up very perfectly, or perfectly, I should say. And what that means is that you might be off by weeks or even months in that bottom, but it's still useful nonetheless. Now, the first move is often a false move out of a low volatility situation. So when this volatility dries up even further relative to how much it was, and that just keeps compressing and compressing and compressing, a lot of times you'll get a big move out, an expansion in volatility. Volatility expands, contracts, rinse and repeat. But sometimes you'll get a narrow range where the volatility begins to dry up. You'll have a big pop, let's say, to the upside, and then it reverses and then takes out the bottom of the range. So sometimes that first move is a false move. And the second move, should it occur. Now, I'm not saying that just because volatility, the first move of volatility is often a false one, the first move from a low volatility situation is often a false one. Doesn't mean it should fade that move, but rather if it does come back in and then go out the other side, that can often be the real move. And now I want to add a new feature to the presentation. It's what I call Tarzan speak. So with the S&P stuck in a bit of a trading range, if we break out of that trading range and hold, in Tarzan speak, good Now, if we break out of the bottom of the trading range in Tarzan speak, not good. And then, of course, if we break out the top and then break out the bottom, as I just discussed, that would also be, in Tarzan speak, not good. Okay, coming soon. I talked with the powers that be over at StockCharts last week. We had a fantastic meeting, and we talked about my indicators or illustrators that are being put into ACP. I've been working with the programmer. Super nice guy, working really hard. And I'm very, very excited about these indicators. And one of the newer ones we added last week was the Landry proper order of the moving averages and also the 10% buy line. So the 10% buy line is this little green line up here. And all that is it takes a 50-week new closing high. So you can see on this day here, we made a new closing high. And then it takes 10% from that. Now, my premise, as I've said quite a bit, and this all boils down to classical technical analysis, or why technical analysis works in the first place. The most basic, concrete rule of technical analysis is if a market's going to go from A to C and B is somewhere in between, it's going to have to pass through B on the way to C. So for the S&P 500, given the normal volatility, not this whack volatility we've seen lately, but given the normal volatility, after the market drops about 10% from a 50-week closing high, you need to think about getting out of the way. And then the system that I developed is just that plus a close below the 50-week moving average. And if you download my slides from prior presentations, as I said earlier, put your information in and download the slides, and also take the free market timing course. I discussed the rules in there, and then I think in prior presentations here we've also talked about that. Now, a cool little indicator, and I'm just seeing this myself a few days ago, so I haven't really had much time to play with it, but would be to take the proper order of the moving averages and count the days or periods. In this case, this is a weekly chart, but count the periods that the 10 simple is greater than the 20 exponential, and the 20 exponential is greater than the 30 exponential. This should read 30 exponential here. Now, if we look at the number of periods in the uptrend, we could see that for a long, long time, remember this is weekly, okay? So this is 52 weeks, so a whole year we've been in uptrend proper order, and obviously the last year or so, the market has headed higher. Now, when the moving averages begin to cross over, but they're not yet in downtrend proper order, meaning that the 10 is not less than the 20 and the 20 is not less than the 30, then this indicator or illustrator, however you want to look at it, goes yellow, kind of like a caution, and then it goes to red when things are in downtrend proper order, meaning again the 10 is less than the 20 and the 20 is less than the 30. Now, as I've said quite often, and there's several little simple things, the buy line, if you want to look at that, if you want to look on a weekly basis of proper order, which I've done here, if all you did was stay long when you had uptrend weekly proper order and short or out of the market when you had weekly downtrend proper order, you would do fairly well as far as staying on the right side of the market. So in Tarzan speak, green, good. Notice that we had mostly green throughout the late 90s all the way into 2000. We had the bear market, as you know, in 2000, not good. You could see everything turn red, and then we bottomed out, obviously 2003, 2004, and we stayed green for a long, long time. We had a little caution here and there, but for the most part, we stayed green. And then, of course, we had the bear market 2008. Notice that it stayed red for a long time. In fact, we only had a little bit of yellow, and we had absolutely no green until the market bottomed out, which was good. And then we had a nice little uptrend. We had a little red in there, but not a whole lot to worry about because the market just kind of consolidated for a while. And then, of course, we had green, which was good. Now, we did have some red for a while in 2015, late 2015, early 2016, and that was a fairly ugly time in the markets. A little bit uglier than the chart would suggest. If you squint your eyes, you really can't see it. But it was a fairly bad time in the markets, and I remember getting stopped out of my longs and putting some shorts on. So this, even though this is a somewhat longer term indicator, it did turn red fairly early in 2000, late 2015, I should say, early 2016. And it also turned red, obviously, very early into two prior bear markets. So that's kind of cool. Now, we did have another good period coming from 2016. I guess I need to use Cookie Monster next week. I'm starting to sound like him. And then obviously we had a little red back in 2018, and that was actually fairly ugly. And I've talked about that period quite a bit. That was not a good period to hold through, even though the market went back on up to make new highs. As I often preach, the market is a bad teacher. And then that last period we looked at in the prior slide, where we went up for the last year or so, almost straight up, was obviously Tarzan speak, good. And now we have a Tarzan speak, kind of a bad period, possibly. As long as this stays red, that would not be a good thing. Now, one thing we talked about, and I'll show you in 1 second here, is the longer something stays red, the longer the chances are that it will continue to stay red, and vice versa on the upside. As long as it stays green, the better the chances of it staying green for a while. Now, I haven't had a long time, or hadn't had much time, I should say, to play with this, but one thing that you might be noticing is after these periods of upside Landry light peak out, then you have a bit of a correction. Now, we don't know exactly where the peak is going to be, and you don't want to rush out and sell all your stocks, but when these numbers start getting pretty high, and I don't have a reference just yet, but let's say 50 would be 50 weeks, a whole year of up, then you know there's probably some bad coming. And it's probably a good idea to make sure you're honoring your stops and trailing your stops and all that money management stuff that I preach about all the time. Now, as I said a second ago, the premise, and we talked about this a little bit last week, so I'll go through this fairly quickly. And this is another one of the ACP indicators, which will be available really soon. But the premise is that after good things happen, good things continue to happen, at least if they happen for a while. And after bad things happen for a while, bad things continue to happen. On the downside, that would mean it's always darkest, as I often joke, right before it gets more dark. So you can see that we turn red based on the Landry light, and that's simply the highs are less than the moving average, and that's indicator in the bottom, or illustrator I should say, is just counting the number of days that the highs in this case are less than the 50-day simple moving average. But you can see red for a while, stayed red. We had that big ugly bear market in 2000. Green for a while, stayed green. We had that long, nice bull market from 2003 up until 2008. Fairly quick bear market, okay? Stayed red for a while and then stayed red for quite a while longer. And then we had mostly green and a little red here and there in between. But it didn't stay red for a long, long time. Now, again, it doesn't mean you throw caution to the wind because it hasn't been red for a while. You obviously honor your stops just in case. So again, just getting through this quickly, we had a little green, we had a lot more green, we did have some red. That 15, 16 little consolidation or slide, again, was a fairly ugly time in the market. And then, of course, we had green. We had that correction back in 2018 in December. We rallied up since, and then, of course, we have a little bit of red working now. So, again, the longer that stays red, the more concerned I will become. Now, we've talked about the weekly bow tie quite a bit, and that's just when the moving averages come together, and that's a 10 simple, 30 exponential, and 20 exponential moving average. When they come together fairly quickly over a short period of time, it creates what I call a bow tie, and that suggests the trend has changed. It goes from uptrend proper order to downtrend proper order, and we do have a presentation just on bow ties. So if we take out 2,700 or so in the S&P, that would be Tarzan speak, not good. That would be a sell. And then on the upside, I wouldn't call it a buy if we went above, let's say, 2950 or so, but I would say the market's improving. So sell or not good below 2,700, and then improving or good if we are above 2950 or 3000 or so. Now, here's the weekly sells off of major highs and major lows. And as you can see, major bull markets begin when this happens, and major bear markets begin when this happens. So I think it pays to pay attention. And right now, the point I'm trying to make is we are under a sell signal. Now, shorter term, things have been looking great. NASDAQ's going up. I'm seeing momentum stocks. I'm looking to get long. I'm going to show you two stocks. So I'm going to tease you with two stocks. We have two mystery charts this week. So things are improving, but longer term, we still have some issues. There's always something to worry about. Now, you're looking at all these indicators, and you're probably thinking, how much is this going to cost me? Well, absolutely nothing, but here's the catch. Tarzan is not included. Now, all kidding aside, indicators will be free. I was talking with management over StockCharts last week, and we decided that we're going to go ahead and make these free. And that's as a service to you, so just encourage you to use StockCharts, to use these indicators or illustrators. And if you like what you see and you want to learn more, then obviously you would support me and my website too. Now, as far as the overall market, check back often, one day at a time. Let's look at the signals in the charts, okay? And look at the charts. And you have these charts, and then you will have these illustrators or indicators, whatever we're going to call them, really soon. And of course, you want to honor your stops just in case, and take partial profits along the way if you're getting long. And then, again, everything is setup driven. So if I see a great long side setup, then I take it, except for a few exceptions, which I'll show you in 1 second. A couple of missed trades here, which I'm beating myself up over. But you got to be careful to make sure it's not intuition versus intuition. Now, let's talk about the best and the missed and the worst trades of the week. This is a former mystery chart. This is one I showed a couple of weeks ago. It's a Chinese stock. It was topping out. It made a bow tie down. Very good looking setup. I mean, made an inverted cup and handle. And we shorted it around 31 or so. And then it failed miserably. And we stopped out. Now, after I shorted it, somebody pointed out that a hedge fund or a research firm that goes after fake Chinese companies had some reports on it. Citron, in case you're interested. Citron Research. Anyway, obviously, so far, it's failed miserably. And I say so far, the service recommendation stopped out. I actually still have a couple of puts left in this particular stock. So shame on me for that. Now, here's a mistrade. Maybe that Chinese being fraud was in the back of my head, messed me up a little bit. Maybe I was a little bit more bearish than I should be with the conditions longer term in the overall market. But this was on my Landry list couple of weeks ago. We had a really nice trend. It was persistent. It was accelerating. The stock pulled back, and then it took off without me. So that's a bit of a bummer. And you're probably thinking, well, Dave, why are you showing us this? It's like, well, it forces me to want to be a better trader. You make me want to be a better trader, so to speak, as does my Facebook group. So if I painfully show you these things that I missed, maybe next time I won't miss them. And then the good thing is, not good for me, but good for my clients, and I guess ultimately good for me too, is that I do show these things in my Landry lists, in my trading service. So I'm sure somebody went out there and profited on this, even though I did not. So that's PDD. Another one that I miss, which was obviously a bit of a bummer, was RVMD. And again, I'm showing you these so to help me become a better trader and to help you to possibly see some of the things that I might be seeing or help you catch these on your own. Annie Duke wrote a really good book called Thinking in Bad, and it reminded me of one of the traders I met down in St. Lucia during Charlie Kirk's retreat for traders. And Charlie Kirk was kind enough to invite me to be the guest of honor. And one of the traders, as we were having cocktails, we were all kind of moaning and groaning about how we could have made more money on a trade or we could have done this better. And he said, you ever notice at the bar the traders who really are in the trenches and really are trading are kind of moaning about how they could have done better, whereas these guys who claim to be these great gurus are always talking about how they trade perfectly and they make all this money. Anyway, Annie Duke had a similar thing that she talked about. She talked about some of this one particular poker player in general didn't really have a big ego. He would win a match, and then he'd go to the bar and he complained about how he could have played his hands much better. Now, I don't want to flatter myself and think that I'm the grand poobah or anything, but I do beat myself up a lot, and I think that's okay. And I think as long as you look to get better and strive to get better, I think that's a secret to trading. So I kind of go off on these tangents when it comes to these scumbags, but let me just relax for a minute and get back to this great trade that I missed. And this was an IPO. Now, IPOs have a bit of a breakout characteristic to them, and I'll flesh that out in just one second. But this stock came public, didn't do a whole lot, bottomed out, made a cup in a handle type of pattern. It also made a bow tie and a pullback, if you want to call it that. And with IPOs, I like to buy them as they're making new highs. Now, most of my methodology is pullback based, but in IPOs, I will buy them as they break out. So when this thing pulled back, I should have been a little bit more aggressive in going after it. Or when this thing pulled back, I should have gone after it, knowing that if it did make it back to the old highs, then that breakout characteristic would follow through. So again, it pulls back and then triggers that pullback and rallies nicely. Now, all of these stocks were mentioned ahead of time on my Landry list. In fact, that's exactly where I get the mystery charts, is from the Landry list. Now, I don't have a best trade to show you this week, but hopefully, and I know you should never use the word hope in this business, but hopefully this will be my new best trade. And I actually, yesterday on the close, I went to put it in as a potential setup, and I noticed that somebody had already talked about it in my Facebook group, and I said, dang, Ed, you stole my IPO. I was literally just getting ready to mention that one. But anyway, good for Ed. I'm glad that we have more than one set of eyes out there. So with this pattern, I'm looking to buy a 5-day closing high. And there's a lot of caveats, but you can see, based on the limited history of this stock, the highest close up until yesterday, May 11th, I'm recording this on the 12th, was up around 14 and change, about 14 and a half. And then yesterday closed well above that level. So that created a buy market on close. The name of this symbol, or the symbol I should say, is GAN. And we'll see what happens. I felt pretty good this morning when I came in and saw it bidding up pre-market. But now it's traded off a little bit. But so far, I think so good on that one. So if you want to follow along at home, that's GAN. Now, we've got a couple of mystery charts to go through real quick. And I talked about this one being a possible mystery chart, and I made it official. This is an official recommendation coming into the day. I have working orders on this stock. Notice it's made a nice persistent trend higher, and it's pulled back. Now, it's got quite a few days in the pullback, but the fact that this thing has made such a nice move higher, I think it's worth a shot. And our next mystery chart looks a lot like the prior one. You can see it's really taken off in here, and it's begun to pull back a little bit. Now remember, as a general statement, I like to trade pullback, so we'll flesh those out. Wow, time sure goes fast. We're already out of time. If you need to reach me, davelandry.com/contact. If you want the slides from this presentation, go to davelandry.com/stockcharts. I want to thank you all for watching, and may the trend be with you. And everybody, stay safe and stay sane. Thank you so much.
Hey guys, Grayson Rose here with StockCharts.com. Thank you so much for watching. I hope you enjoyed this video. Remember, if you did, give us a like down below, leave us a comment. We'd love to hear from you. And most importantly, don't forget to subscribe to our YouTube channel for daily content from an incredible collection of technical analysts and financial minds. We'll see you back here very soon. Happy charting, my friends.